Razia, thank you very much. Before we go out to the audience, there are a few points there, Roger, that you might want to pick up. I think your qualified optimism is coming across as slightly more qualified from the commentators, but particularly the questions about intra-regional trade, about diversification, maybe about sustainability, and also Razia's points about structural transformation as well.
Yeah, I will be very brief, since I would like to give the audience an opportunity to comment, to ask questions. I mean, I think Isabella's quite right in asking about regional integration and the potential for regional trade to try to offset some of this. I suppose again there's an optimistic and a slightly less optimistic way to look at it. But let's start this time with the less optimistic one. You know, intra-regional trade in Africa is very low. That's compared to other parts of the world, it's extremely low. But here's the optimistic take. It's actually doubled over the past decade. So in 2000, about 7% of sub-Saharan African trade was intra-regional. Now it's about 15%. So that's the good story. And maybe to add to the optimism, there is a push for more regional integration that you can sense in many African countries. Regional trade agreements are still a bit of a spaghetti bowl if you see it on a map. But if you go to the East African community, you do sense that that there's a political will to move. And these things take a long time, but I think there is a lot of history suggests that it will go in that direction, and that will help not just to offset some of these international turbulences, but in the long term, a more integrated East African community will mean a market of more than 100 million people in East Africa, which of course is much more attractive to investors than 5 individual countries. So yes, and it's an area in which I think the IMF is doing increasing work with regional institutions as well. You know, I do agree with Razia that the risks are quite significant, and there's absolutely no guarantee that the bounce back would be as fast as it was. And indeed, if commodity prices go down and stay down for much longer than they did in the second half of 2008, Africa will be significantly affected. Where I maybe slightly differ is that I'm a little more optimistic on the resilience side. I think if you look at levels of debt, they haven't actually moved that much on average, despite the widening deficits. Of course, there are countries that are slightly more exposed than others. Tanzania, I think I cited as one, where they have let debt levels go up quite significantly, and they don't have as much margin left. Senegal, I would probably put in the same category. But on average, debt levels still remain low, and that does provide some margin of error, some margin of maneuver, and the same on the reserve side. But the bottom line is that Africa remains very dependent on the world economy. If the world economy takes a nosedive, Africa will have to brace itself.
Thank you very much, Roger. Let's move to a general round of comments and questions. Can we start with one round for Roger, please? Questions only to Roger before we open up more broadly. Yeah. Can you announce yourself, and please keep to 1 to 2 minutes each, because we're a little constrained on time.
My name's Peter Kemp from Energy Intelligence Group. I was very struck in Roger's data that he cited, pulled out Ghana, Tanzania, Uganda, Mozambique as strong growing economies in recent years, but he also noted that the poor have benefited less from growth in most of those countries, Uganda being the exception. Also, in the case of Tanzania, Uganda, countries with extremely high inflation. Now, those countries also share the fact that there have been very significant oil discoveries, huge gas discoveries now in East Africa. And is there any evidence in this data that they are already sort of on the decline into sort of extreme inflation, beginnings of the Dutch disease, even in anticipation of the development, which is still many years away? The question, basically, the perennial resource curse question: are these sort of new upcoming oil and gas producers going to fare any better than their predecessors, such as the Nigerias and Angolas that have gone before?
Thank you very much. Any other questions directly at this point? Stephanie, and then behind you.
Yeah, I really like the presentation in order.
Stephanie, can you introduce yourself?
Stephanie Griffiths Jones, Columbia University and Associate of the Eye. I thought Roger's presentation was very good, and I really welcome the fact that the fund is now telling countries to have counter-cyclical fiscal policies, like the case of South Africa, rather than telling them to have fiscal consolidation when growth is low. And I hope that you can influence Germany as well.
Working on it.
Talking about low-income countries in sub-Saharan Africa, I think one of the issues that is interesting is that because the buffers have come down, as you pointed out, and Isabella pointed out, should the fund not be thinking about larger facilities to protect countries in the face of shocks? Also thinking, because in the last stage of the global crisis, for example, Europe, through VFLEX and other mechanisms, played a very positive role. And although I would encourage them, of course, to do the same, one has to be realistically afraid that they may do a little bit less than they would have because the crisis at home is so big. So it may then therefore go to global institutions like yourselves and the bank to help developing countries more. And if I may, a second question would be, you mentioned this growth of credit as an encouraging factor in African countries, and indeed it is. Of course, it's at very low levels comparatively, but do you have any particular worries about, because the graph was quite steep, and whenever a graph is steep, even at low levels, one has to worry about new vulnerabilities.
Thank you very much, Stephanie. I think there was a question, two questions behind you, yeah.
Thank you. Richard Reeve from International Alert, Peacebuilding NGO. I'm struck by headline growth figures, headline GDP growth figures on page 4 of the report, which suggest that after a decade or so of fragile low-income countries falling well behind the half of other low-income countries in sub-Saharan Africa, in 2012, 2013, you predict them to catch up or even exceed. What might account for that?
I'm Nzita. I'm an independent economist. I'd like to make some criticism regarding the report, in particular in figure 3.1 on page 60. Yeah. I see that for the DRC, the extraction of coltan is missing, and this is quite driving the war in DRC, in Rwanda, Uganda, and Burundi. And you know that in the world economy, coltan is playing a leading role in mobile phone, the computer industry. So why the IMF did disregard the role of coltan when the DRC has around 90% of the world coltan, and the US need it very much. Thank you.
Thank you very much indeed. One more question and then I'll go back to Roger and take a broader round. Yes, sure. Then next round. Right. Okay.
Hi, my name is Donald Marvin, and I'm from Tier Fund. It was a good presentation. My question is, and comments, implications for structural reforms in Africa. I get a sense that, unfortunately, despite the statistics that are there is not enough radical thinking. In my mind, areas like land in Africa that continues largely to be under communal ownership, if that is commercialized, if that is the right word, what are the implications for the future? Issues like taxation as well, and how that is handled. And my final comment, I think, especially on the resource side of the presentation, it strikes me that it's still more about being resourceful in Africa than having resources. So the whole area of human development is key. So my fear is actually that we are sort of tinkering around the edges, and there's not enough sort of radical thinking or policy recommendations that are really radical. I mean, if you take a country like Malawi, a quarter of the country is underwater, but the investment to make use of that water is very low, and the whole farming system is labor intensive, and it can't continue like that because there's a limit to how much you can depend on rain for farming. So that's my worry as well.
Okay. Thank you very much. Roger, would you like to take that round before we go back for another round?
Gladly, and thank you very much for insightful questions. I'll try to do my best to answer them. On the new resource producers, and are they already suffering from Dutch disease? I think my short answer would be no. They're not. The inflation in East Africa, I think, is not a function of Uganda's soon-to-be status, for example, as an oil exporter. It was more the result of second-round effects of food price increases, in particular, that were where the monetary policy response was late. But you are raising exactly the right question, which is what are countries going to do to avoid being the Nigerias and Angolas of the next generation? And here, again, I'm optimistic that these countries can do better. They can do better for both economic and political reasons. But let's start with the political reasons. You know, the countries like Tanzania, Uganda, Mozambique have built over the last 10, 20 years, I think, more robust democratic institutions with obviously some way to go, but a lot more robust institutions than the early oil producers had. And I think that will protect against some of the governance problems that the early oil producers face and that they really never completely could get out of. If you've been to Angola and you know about the role of Sonangol, it's really hard to break that. But if you start from scratch, you have a better chance. You have a better shot at it. And the petroleum revenue bill in Ghana, I think, does provide a far stronger institutional framework. Is it perfect? We will see. We're at early age. Will it be adhered to? We will see. But it's a very positive start. And Mozambique has been, I think, extremely concerned about making sure that they put in place the kind of institutional framework that will be robust to this. But you're absolutely right. It is the challenge. It is the challenge for African energy resource producers. Well, Stephanie, thank you very much for welcoming our counter-cyclical views. They're not that recent, but at least the world does seem to acknowledge them, and I understand even here in the UK. So I'll focus on your question about, are we thinking about new facilities to provide more financing? Well, you know the IMF very well, so you will not be surprised to hear that, of course, we are thinking, because we're constantly thinking about new facilities. And one thing I should say, and you know, I didn't put this in my presentation since it goes back 2 years, but in 2009, I think it was a nice example. I used to have a slide in all presentations that I did in that year of the IMF's ability to respond very quickly. And it's one institution that doesn't take a long time. So you know, we were providing financing around $100–200 million or so a year to low-income countries during the boom period, very little. 2009, it went from 200 million the year before to 5 billion. Right? Because the IMF can very easily scale up its financing. We don't have to go and get it. You know, we have it sitting there, and we can use it when the countries face shocks. So the question really is whether the amount of financing we have for low-income countries, is it enough? And this goes all back to the whole debate about, you know, how do we finance ourselves for low-income countries? How do we use the gold profits? There's lots of debate here. My personal view, which is really purely my personal view, is that we need at the IMF to find ways in which we can use not just that pot of money that's dedicated to low-income countries, but also some of our other funds, which of course are huge. And then we're talking about $1 trillion worth of funds that we are using for advanced economies, to be able to use some of that also for low-income countries. And then resources would be practically unlimited for the needs that low-income countries face. And that gets into a technical debate about, can you blend these two, or could you use one to guarantee the other? And there is a lot of thinking going on there, and I would say, watch the news, because there's a lot of thinking ongoing in our institution. Your question on whether this private sector credit growth raises questions is a very pertinent one. I think the immediate answer has to be yes, you do have to look at that. That line, which looks steep for the average of sub-Saharan Africa, looks a lot steeper once you start looking at some countries. When I was mission chief for Tanzania a couple of years ago, you had an average rate of private sector credit growth between 30 and 40% for about a decade. I mean, Razia probably knows it better than I do, but that's what I have in my memory. It's a very sharp increase. So what is the quality of that lending when when the banking system is lending that fast? You typically only find out later. Because when you do things like stress tests and all of that, you're looking backwards, right? So it's clearly a risk. I should add, though, that I think that the banking systems in Africa are a lot more robust than they were in the past. When I went to Tanzania for the first time in 1990, there was only one state-owned bank, and I would say about 80% of its portfolio was non-performing. We now have 30-plus banks, and most of them are extremely robust. So it's a very, very different picture, fortunately. Your question about fragile states and why they're growing so fast, I suggest you go from page 4 to the first page of the statistical tables, which is, let me tell you, it's page 88. And why do I ask you to do that? Because it actually shows you where the number comes from. And it's heavily influenced on fragile states by Côte d'Ivoire. Right? And we weight by GDP. So Côte d'Ivoire still figures as a fragile state. Côte d'Ivoire is going to grow by 8+% in 2012, and that raises the average. That's really the short answer to your question. I like the question about why did we disregard the role of coltan? And unfortunately, I don't have an answer, since I don't actually know why we did, or even if we did. My guess is that what might be important in a single country might not be large across the whole of sub-Saharan Africa. But frankly, I don't actually know. So I'd be happy to get back to you when I ask my commodity expert colleagues as to what is the weight of coltan exports in total natural resource production in Africa. It's just something I don't know, and I'm sorry about that. And finally, on structural reforms, I think you're absolutely right. This is what it's in the end all about. And I think Razia raised a similar issue, which is, well, you have fast growth, but have you seen structural transformation? In a way, it's a bit of a buzzword at the moment, and I'm not. When I hear it, I'm never so sure what is exactly structural transformation. And does Africa have to become Asia before it becomes Europe? I hope not. Africa is different, and probably will be able to reach its objectives in a different way. But it is a very interesting debate, and I think it is important to think not just about growth, but where is this growth coming from? I've given this presentation now a couple of times around Europe, and one question that does come back quite a lot is demographics. The demographic dividend. Can Africa seize this demographic dividend? And my answer is, well, there's certainly potential to do so, but it's by no means automatic. And the one thing that you do need to seize such advantages is education. And if you don't have a skilled labor force, then that demographic dividend is not going to help at all. So investment in education, which doesn't show up in IMF reports, but is probably absolutely essential to creating the kind of growth numbers that we end up looking at. And here, I'm sure all of you know this, far more than I do, but my impression is that it's quite varied. You have some countries that have been able to improve education, the quality of education, and others still have a long way to go. But without education and obviously health, it'd be very difficult to exploit the advantage which just purely on the demographic numbers Africa will enjoy over the next 10, 20 years. Maybe let me stop there so we have some more time.
Thank you very much. Very clear and detailed answers to those questions. I'm just going to read two which have come in from our virtual audience quickly before going back for a final round, and then we'll go ask all of the panel to comment quickly. Frank Dossa, who's an associate manager at a London-based diaspora organisation, Afford UK, asks about the potential role of innovative initiatives using the African diaspora as a bridge to boost job creation. And Nishi Agrawal of Clock Tower International, how does the panel feel the single currency planned for the East African community later in the year will help to improve trade and development? That's an interesting one. But for now, let's go back around quickly. And 1 minute, please, for each question at this point.
Hello, I'm Sophie Powell from Christian Aid. I was interested, when you started off showing some of the graphs at the beginning, Roger, you obviously showed the important role that commodity prices have played in Africa's growth, but then you went on to say that it's not only a story about rising commodity prices, and you showed a graph about rising capital investment, but you didn't say what that was in. And I'm sorry I haven't read the report, but other figures that I've seen and trends that I've looked at seem to suggest that the vast majority of the capital investment is in those same sectors, right? It's primarily still in the extractive sector that most of the capital is being invested. I just wanted a clarification on that, but then also related to that, the point that you sort of got to eventually about the actual minimum translation of the limited translation of that growth into poverty reduction in sub-Saharan Africa, which didn't seem like a particularly rosy picture to me, having fallen from something like 58% to just under 50% or something. So actually very limited gains in terms of poverty reduction from that growth. If indeed the growth is very largely being driven by the extractive sector, which doesn't tend to provide jobs and isn't being taxed effectively, limiting the potential of government to invest in the education you talk about, so on and so forth, then it's not that surprising. It's not that surprising if the growth is so focused on such an enclave sector.
Thank you very much. Can we move to...
Thank you. Mike Street, an independent observer. I think it's becoming increasingly clear that any long-term resilience for Africa depends on the green economy. It's only been mentioned once today, but it's one of the main themes of the Rio +20 summit in 3 weeks' time. And this is Africa's opportunity to show its green growth potential because it happens to be has the least brown developed economies. I think it was in 2010 the IMF earmarked something like 100 billion for a green fund, and I just wondered if Roger has any idea whether the IMF is getting involved in Africa's green economy in any way and will be having representatives at the Rio +20 to bring this up. Thank you.
I'm just at this point going to take 2 more questions, if it's okay. Actually, well, there was one here. No. All right, one here, and then... Oh, actually, we'll start there, and then one here, and then that's it.
David Jones, past president of the International Federation of Social Workers. I'm just comparing what you've described at the macro level with some of the micro sorts of issues that social workers perceive and see, and noting the fact that the poorest have benefited least from growth. Across Europe, south of Europe, we're seeing a rage at changes in public sector. We're seeing that in voting in France. I don't think we've seen work through yet the social consequences of the crisis in the Eurozone. In Africa, in contrast, my observation and experience have been a frustrated expectations of younger people who are not getting the jobs despite the growth that is there. And that is really quite a strong, their expectations are being frustrated very substantially, particularly in some of the rural areas. And this must have some consequence. does the obviously counter-cyclical policies help to mitigate some of those things? But what is the IMF's perspective and other colleagues' perspectives on the social consequences? Do they not matter? Is it the macro issues only, or is there something happening within the social relationships and within local health and education services? Those sorts of things, the young people, orphans, those sorts of things that also need to take into account, and what impact do they have on growth projections?
I'm going to stop the questions at this point because we're getting over time and return to the panel, the full panel this time. Roger, maybe you can have the last word. So, Nicola, are there any points you want to pick up there?
Yes, I think that... Thanks. I think that, as you may understand from this discussion, really the great challenge, especially for natural resource exporters, is the following: how to share between consumption and current spending, how to use royalties and rents deriving from the exports of natural resources, how to share these rents between consumption, current spending, and future investments. And the other great problem for natural resource exporters is which kind of investments do we want for the future of these countries? Do we want just to talk about capital assets, domestic assets, or are we also thinking about a future in which these sub-Saharan African countries may also invest in renewable energy, for example? You should not forget that there are some countries like Nigeria which that have a lot of oil, but in many cases are not able to refine the oil you cannot use, so are obliged to export. So what's the future for this renewable? What's the future for African countries from this point of view? I think that the answer is to have a broad range of policies in order to deal with this kind of issues. And second, it's very important to have a very broad interdisciplinary approach and perspective.
Thank you, Nicola. Razia.
Maybe if we address two of the questions, the limited translation of growth into poverty reduction in sub-Saharan Africa, and related to that, the frustrated expectations of younger people, I would put it perhaps in a slightly different way. We know that we've seen resource booms in Africa in the past, but generally not with the kind of poverty reduction success that we seem to have seen in the recent past. So I think the experience of Africa over the last decade and a half, even though there's plenty of room for improvement in terms of how much poverty rates are coming down, I think it is at least more optimistic that what we've seen very recently is better than what we had seen perhaps in those previous decades in the midst of resource booms. What is driving African growth? It seems to be something much more centered around consumption. I think the demographics of the region will have a lot to do with it. Macroeconomic stability helping that consumption boom. We see the numbers in terms of private sector credit. It seems as though Africa has grown despite the resource boom, not necessarily because of it.
Thank you very much, Razia. Isabella.
Yeah. There was no specific question on my presentation, but I would like to go back to one point that has been highlighted by Stephanie, and also I mean, we got also good response from Roger. And I think that it's important to highlight that, as Roger said, Africa could have good growth prospects for the future. But I think that, and I would like to emphasize that it's important, even from now and especially in the light of the previous global financial crisis, to start thinking about the new possible role that the new shock facilities may have in the current context, and also to keep in mind that coordination among multilateral institutions always remain a key priority in a context of global shocks.
Thank you very much. Roger, with many thanks. The final word. I think we had youth, growth, poverty, and also this interesting question. I'd be very interested in your view on the single currency for East Africa.
Well, let's start with that. I think the single currency in East Africa is an objective. It's an end point. I don't think it's the place to start. We have regular consultations with all the 5 countries, and I think they're aware that while it's might well be a good idea to have a single currency at some point in time. There's still a lot to do before they get there. And frankly, the experience of the Eurozone over the past 2 years does give pause, not in the principle, but in how you set it up and what are the requirements, in particular the requirements for shared responsibility, safety nets, and the inevitable loss of sovereignty if you join a currency union. And I think those are issues on which you have to really have a lot of political consensus before you move ahead. But there's a lot of things that the EAC can and should be doing, ranging all the way from freedom movement of goods, people, and capital within their 5 countries, which would help a lot in terms of building the strength of their economies before going to a single currency, and that's indeed what they are doing. Regarding the role of the diaspora, on a financial side, I think the African diaspora around the world, as African economies are strengthening, will be attracted to both invest and possibly return, and that is of course an enormous strength for Africa. But it will be a function of how well economies are doing and how attractive those opportunities are. And so there I think the initiative lies with African countries themselves, but the potential is clearly very, very large. You had a very specific question on what is the investment that underpins this, and I would say from my experience and my knowledge, this is not exclusively or even mainly in extractive industries. There's been an enormous amount of investment in a variety of sectors, ranging from construction, telecommunications, and that's where most of the investment, domestic investment, has taken place. There's been, of course, some foreign investment in extractive industries, but that is relatively small compared to these numbers. So it's more broad-based than you might think. On this question of the limited translation into poverty reduction, I must say I'm very much on the same page as Razia here. If you look at a longer period of time in Africa, and you look from 1980, say, rather than from 1995, and you break it down into 80 to 95 and 95 to 2010, between 1980 and 1995, per capita income in Africa fell by 2 percentage points a year. The social impact of a decline in income over 15 years is huge, and many of you have been aware of that. I mean, that period for Africa was a terrible, terrible period. Since 1995 to 2010, per capita income has been going up by 3% per year on average. And it is with this wealth that the improvements that we have seen have been possible. We can all agree that it's a long way to go. But I'm very much with Razia in saying, but this has been an extraordinarily good period. And it is not just a natural resource story. And that, I think, was the point of my slides in the beginning. It's been a story that has been composed of many aspects. I'm an economist, so I talk about the economics of it. But the politics of it are equally important. Before 1995, you had very few democracies in Africa. After the changes you saw in Eastern Europe, that also changed Africa. That made politicians a lot more accountable. And accountability is good. It's good for economic reasons, but it's also good for social and political reasons. And on the social aspects of it, I completely agree with you that for sustained growth, you need social consensus. And if you have groups in society who are not benefiting from this growth, then it's very difficult to sustain it. But let me say on that one word on those last slides. Those last slides were not meant to be pessimistic. I mean, the poor have benefited. Right? In some countries, they've benefited, and these were the fast-growing countries. So they've grown. The poor have also seen growth of 3, 4, 5, 6%. Income growth, and this is on a household basis. So the household saw their income go up by 3, 4, 5, 6% per year, but they benefited less than the rich. So it's a relative concept. But so the first message is growth benefited poverty reduction in these fast-growing countries. Second message, but the distribution of this growth could have been better. And to sustain it, it will have to be better. But without growth, and that is, I think that's what we saw in those years since 1980, without growth, you really have nothing. You have nothing to distribute. And then the poor suffer the most in such circumstances. So I think we must make sure that we don't get the story upside down. Is there a lot left to be done? Yes, but I think we're well underway. And just one word now on the Green Fund. I mean, the IMF, as a bunch of macroeconomists, this is not front most in our mind, but there are contributions that the IMF can make, and those are on the financial side. And the proposal in 2010 in the context of Copenhagen was that the IMF could leverage the kind of resources that we have into a fund as a sort of guarantor, and that's where the 100 billion number comes from, that would help finance the kind of investments that were being talked about in terms of making the world economy ecologically more stable. I think it's fair to say that the international community is not on the same page. So our proposal was not picked up because there's no consensus. Should that consensus be there, I think the IMF might well be one source of financing, but you first have to have that consensus, and Rio Plus 20 will be an opportunity to try to forge such a consensus. Let me stop there.
Thank you very much indeed. Thanks a lot, Roger. I'm sure those of you who want to continue the discussion, as your prize also for staying to the end, there are some drinks and nibbles, in the kitchen, I take it, or is it in that room? I'm not sure where they are. Yep, no, back over there. So there's an open invitation. But I'd just like to finish by saying, by thanking Roger for bringing the report here. I think it's been a very interesting discussion. There are some other areas about vulnerability that we were maybe not able to bottom out, about the need to build some kind of social protection systems that can take account of future uncertainty as well, or strengthen those. But all in all, thank you very much to everyone. It was, I think, a timely moment to have this discussion about qualified optimism for Africa. Thank you very much.